Today, I'm going to walk you through the top thing I think our governments can be doing to cool Canada's red hot housing market. My name is John Pasalis, president at Realosophy Realty. You can catch all my latest writings on movesmartly.com about Toronto's housing market. And if you want to stay up to date on all my latest videos, please hit the like and subscribe button to stay up to date. So it's consensus in Canada that we certainly have a housing bubble. This is, it's made international news in the Financial Times, Wall Street Journal, Bloomberg, and even our policymakers finally are acknowledging that we have an overheated housing market, from the Bank of Canada to CMHC. Now, for those of you who don't follow or just started following, you'll note that in my December report, I warned that this was the place we're going to be moving to. The Toronto housing market was overheating. We're likely to be in a bubble. And we ended up in this place. I wish policymakers had been following our blog earlier and our reports, because we saw that the writing and it was quite clear that this is what we were moving to. They're kind of catching the market a little bit late right now. And I think that's the buying that they're in. I mean, the time to be introducing policies to cool the market is before we have a housing bubble, obviously. Once you're in a bit of a mess like this, the challenge is you don't want to be introducing too many policies, because they end up risking cooling the market significantly and potentially pushing prices down, which I know is desirable for a lot of first-time home buyers, but that's not really what the governments are really there to be doing. So we've seen tons of suggestions from bank economists about things that governments can do, everything from speculation taxes to basically adding capital gains taxes on principal residences. I think a lot of these measures are knee-jerk. This isn't the time to be introducing a lot of measures. I think what government should be doing is not thinking about what they can do to cool our market today, but think about where we want our markets to be in 5 years. And I think, to me, the big policy that should be driving these decisions, this big idea, is that we should be moving towards a market that single family homes are bought by people who intends to live in them, not by domestic and international investors who are just using them as a financial asset and a financial vehicle to become wealthier. And I think that's the big shift we need to move to as we move forward in this market to see a little bit more affordability. So why investors specifically? Now, to be clear, the demand we're seeing right now is actually not an investor-driven demand quite yet, at least not in the low-rise market. But I suggest investors for a couple of reasons. For starters, demand from end users is naturally going to unwind. I mean, we're starting to see that on the ground already. So we don't want policymakers to be putting in too many policies that make it harder for first-time buyers to get into the market. We've already seen recently that OSFI, our bank regulator, is going to be increasing the stress test. Again, I don't know if this is the best move. It makes it harder for first-time buyers. And I think that's the backwards policy. At the end of the day, if we're going to be tightening credit for anybody, it should be for investors. And the reason I say for investors is because this is the point in the cycle where investor demand really picks up. We've seen, and we're starting to see that in the condo market. Prices have been going up by 30% per year. So investors see this as a guaranteed way to make money. And the reality is, many of them jumping into the market now, in the condo market especially, aren't even expecting 30% gains. I mean, at the end of the day, if you're an investor and you put down a 20% down payment, all you need are prices to go up 10% per year, and you've effectively doubled your money in 3 years, even after your transaction cost, because it's a leveraged investment. And I think this is one of the big reasons why, if you look at all the data from Statistics Canada, I mean, Canadians are investing more in single family homes than we are on manufacturing, on machinery, and on artificial intelligence. I mean, we're heavily invested in housing. And the reason, of course, is, I mean, you can't double your money in 3 years and everything else. We've made housing such a lucrative investment that our entire economy is really, really highly dependent on it. So how do you kind of cool demand from investors? I mean, at the beginning, you probably just make it a little bit harder for them to get into the market. Countries like New Zealand have increased down payment requirements. And that's, of course, one way to start cooling demand and making it harder for them to get into the market a little bit. In the future, I suspect we'll be seeing the federal government introducing policies very similar to what the BC government has put in place with their non-resident vacancy tax, which basically effectively levies a tax on any investors who have properties that are just sitting vacant, and it encourages them to at least rent them out to avoid paying this tax. So again, I don't think investors are the only problem in our market. I don't think this is going to be a magical solution, but I think it's certainly a better path to go on. I think it's in the short term, at least, is going to prevent what is likely to be an accelerating market in the condo market, in particular in the GTA, as investors flood the market and just expect prices to keep going up forever. So at this stage in the housing cycle, we want to kind of cool the motivation of investors who are moving into the market. And I think, when we target them, it's going to really achieve a few goals over the long term. I mean, number one, it's going to make homes more affordable just by virtue of the fact that home buyers tomorrow are going to be competing with fewer people out there because there are going to be fewer investors in the market. And ideally, we're going to move to a market where Canada's housing or Canada's economy isn't as dependent on single family home investment as it is today. I mean, it's not a great place to be in. At least our economy vulnerable, and we should have businesses investing in other segments of our economy. So I'm sure we're going to get a lot of disagreement in the comments. That's the big thing I think our government should be doing as they introduce a new budget to cool our housing market. Any questions, feedback, please post them below, and you can shoot me an email at askjohn@movesmartly.com.